Thank you so much, Jason, for joining us here at the Dwelling Show. I'm super excited to have you on the show. I was on your show, I think, a few weeks back. It was amazing. I had a great time. So thank you so much for having me on that show. And thank you for being here today.
Well, thank you so much, Ola. It was amazing to have you on the show. It was incredible feedback and just incredible information that you provided for all of us. I learned a ton. I was inspired. So I'm happy to be here today and look forward to seeing what we're doing.
Awesome. So I think, Jason, I feel like you do a way better job. Just tell our Dwell listeners a little bit about kind of what you and Pili have been up to. Of course, I know you guys, but I want you to give us just like a foundation of kind of what you guys have been up to lately.
Lately, or how far back do you want me to go?
I think let's do lately. I think that's probably
sure.
Yes.
So Pili is my wife, Pilialoha, and we're both here in beautiful, sunny New Jersey, which I have to keep saying because Pili's from Hawaii, so I have to convince her that there's elements of Hawaii within New Jersey. So that lasts for about 20 seconds. So past that, we're flippers here in New Jersey when we do wholesaling, and then we buy multifamily out of state, because the buy and hold scenario here in New Jersey is not able to really meet our price expectations and also our model of syndication, and we're not able to fulfill the investor returns we'd want to seek if we were here within New Jersey. However, it is a great market for flipping because we are in a county called Union County, about 26, 27 towns in the county, and 13, 14 middle to upper end towns within New Jersey, where you can find a lot of value by finding, we will say, underperforming houses or ranches, and adding square footage to the house and really forcing the appreciation to resell it.
Nice. So you guys are kind of flexing between different asset classes. So you're doing some wholesaling, you're doing some flips, and then you're buying out of state and multifamily.
Yeah, it led us to a point where I have a construction background, heavy construction. So family company, 5 generations of doing a niche form of construction where we lift houses and move buildings. So a lot of our work has been dedicated, at least the last 6-7 years, because Hurricane Sandy basically ravaged the East Coast, and homes, hundreds of thousands of homes were flooded and had to be elevated to get them out of the floodplain. Well, they're still in the floodplain, but get them up to a height where hopefully they'll avoid future flooding and now meet FEMA requirements, and their flood insurance will be cut dramatically. So we do all this heavy construction, a lot of hard work. We're looking for an angle where we could just build up a way to have passive income and just control our lives more than having to just constantly do projects. So noting where we did that, we were flipping here in states, but then we actually brought some duplexes out of state. And that was our first foray into owning multifamily. It was actually out in Indianapolis. And that allowed us to slowly understand the structure, and from there we ramped up pretty quickly to go into a larger purchase, our recent 94 unit purchase that we did a couple months back.
Wow, thank you so much. That's a good foundation for us. Thank you so much. So let's now rewind back a little bit.
Sure.
So you said, you come from a family of 5 generations of every construction. So of course, this is not your first rodeo, obviously, in the construction flipping world, and just real estate in general. But just take us a little bit back, even maybe before you met Pili, or, why real estate? Of course, it wasn't a family, but you could have gone and be an investment banker in New York City. Why real estate?
It's a good question. So my family, we had always talked about real estate, and I think there's a point where real estate, sometimes when people talk about it, and even now, and I hear new investors having the same talk that I used to have for myself and my family, you almost talking about this unicorn, like, oh, I want to do real estate, this unicorn thing that you just do something with real estate, not really having a connotation or just conjecture what that actually means. So with me, we always thought of it a way we could just find a better life, but not really having a clear direction of what that actually meant. And it took for finding podcasts and sites like Bigger Pockets that just, it allowed you an arena to really just get yourself a basis so you could have your thoughts be seen by other people, almost regurgitating it to you. And that was the first step where we said, okay, we need to take some actual steps here to figure out a journey that's going to get us out of the day in and day out grind of construction work. And we still do the business. I mean, it's still a big part of our lives. However, now we're setting up a platform that we can just create a better life for our family and honestly find more time to be able to do what we want, have family time. We want to have family time, take uh, active steps to get ourselves outside of that day in, day out grind.
So it sounds, pretty familiar with most folks and why they kind of step into real estate investing. So when you kind of figure that out, you found bigger pockets, you got a more structured approach to this journey that would lead to, financial freedom, so to speak, and spending more time with the family. So after you did that, how did you first map out, okay, we're going to do this kind of strategy, we're going to go flipping or wholesaling or even multifamily? How was that journey? I'm just kind of imagining a dual listener listens to them, like, and they're thinking, how do I kind of get started? Where do I get plugged into?
So I wish I had thought enough to have map it out. It was just to the point that you have a lot of hurdles, and you can call them limiting beliefs, where at some point, you can't do real estate because of X, Y, Z. Maybe it's just, you don't know enough. You need to know more, or maybe, you don't even know what to look for, or you don't have the capital, or you don't even know where to go. So planning out that map, it was all about us just getting over the hurdle of, okay, we know enough right now to do something. So let's just get started. And just like I usually do, is we ended up tackling probably one of the most difficult projects, even from construction aspect, out of the gate. I had found a flooded home that was in disarray. House was gutted, and it was something that had to be lifted. And for what we do day in and day out, I decided that I was going to take this home, move it over, drive wood piles, and then put it back, but not put it back just on top of a new pile foundation. I was actually going to raise the structure itself up a story and build a whole story underneath. So I was actually adding value by adding a whole, basically a whole nother level, but instead of ripping off the roof, I was saving the roof and building down and just creating a whole other footprint. Plus putting it up about 8 feet in the air. So it was, we'll say, flood resistant, and the flood insurance was minimal. So
Wow.
granted to say, I just jumped right in, and that not for nothing, the work was the easy part, but just, I didn't know the process in terms of some of the homeowner building elements that some of the towns have wanted, because they had put in a lot new steps and guidelines now with Hurricane Sandy. And generally for us, we're doing one portion of the work. So I had to step back and figure out those roles at the same time. And that's what we did. We just jumped in and just said, okay, let's try that and we'll see where it goes. And, it took longer than it needed to. We made money, the cool thing on that point, and a lot of steps to learn from it. But it got us going. And from there, we did another one, a similar point. And we've progressively done smarter projects where we've actually made more money by being able to do less, which is ultimately the goal. Is as you, it's like riding a bike. It's the most difficult thing in the world at start, and you go 3 feet, and here, you're gliding at, 25 miles an hour, not even thinking about it, a year later. So for us, we're looking now for real estate opportunities in these better towns where we can take just an asset that is pretty much, or maybe let's just say a ranch or a cape that's a 3-1, and we have the ability to find a way to add a bathroom where we can force appreciation by just adding a bathroom, maybe adding a master bedroom as we're doing, or master bathroom as we're doing today, and it's able to push up the value on the property with the comps in the area. So we've moved in that direction more, just because the other ones, why we could make good money. The timeline was a factor, because now you're going into, have to get plans made. You're going into plan review. You have to get your utilities disconnected, which is a pretty lengthy operation here in New Jersey for all the flooding. And then the inspections are a lot more critical, and there's a lot more of them throughout the process here in New Jersey. So we were constantly trying to find ways, and even today, just to build a better system to get us going. In the beginning, we had no system. We just said, let's try something and go for it and just get active.
So fascinating. So I've heard real estate investors kind of blew off the roof and kind of add extra square footage on the top of the house, but building from the bottom is totally new. So that's super fascinating. But I think what's interesting is, so you did a couple of these projects, or a few of these projects, and then you thought, maybe we could do something better, right? So you quickly pivoted, right? You made a business decision to change, what you were used to, what you were comfortable to. So let's go quickly into mindset. How was that decision like for you? And kind of like what led you to make that? Because sometimes we're doing something, we're making some money, it's so hard for us to just say, I'm going to stop doing this and not start doing this new thing that I don't actually have a predictable result. So how was that decision for you guys, and how did you make that decision?
It's always hard because if you have to put in your time into a project, because ultimately you could see something here where if you take 12 months to do a project and maybe you make $100,000, or you make $40,000 in 2 months, and your effort is so much more drawn out in that your project, where in 2 months you have a really simplified project that you barely have to really put your hands on to get it across the finish line. You have to make that decision of what's more important to you and what really is going to be your model. So we were constantly looking at the approach, and we still are, of how can we just be more efficient so we can make more streamlined, because when you do these longer projects, you also have a lot more capital tied up, and there's a lot less you can do because you have to focus so much in this one project. So while the flipping arena was something that we are still in and still moving with, we've moved into multifamily and investing out of state, because we wanted to not be so under the gun that we had to get through a project and get it finished, but have another way that we could have income coming back to us by basically stabilizing an asset and then building our passive cash flow and our generational wealth through that.
Generational wealth. I love that. I love that. But before we kind of go to the generational wealth section, which is, I love multifamily. Quickly, do you want to give us an example of a deal that you did in the beginning, or one of your favorite deals in terms of the numbers? Just kind of tell us how much you bought it. How did you find it? How did you fund it? And what did you make?
Sure. We did one down the beach. A lot of them are in the beach areas there. It was just a single story ranch. We brought it for $375. We put in, it was actually worked out very well. So we put in a little over 200. It was like, 200 and change, maybe like 220. We ended up getting it right before summer, and my brother actually moved in. We got a CO, and my brother moved into the house and was able to live there for the summer, because he always wanted to live down the summer. And then we got out of it and we're able to put it on the market. And I think, what did we finish out that one? So we were all in a little over five and change, and we sold it for $779.
Oh, wow. So congratulations. That's a really good deal. So you said you bought it for $375. You put about, 200. So that takes us to $575, and you sold it for $770?
$779. Yeah.
Oh, wow. Fantastic. Yeah. That is awesome. Okay. So you made the decision to move from the elevating building from the bottom, and then you started adding like a master, you started adding an extra bedroom. And then you started buying bigger buildings. You started buying, apartment buildings. So what was that transition like for you guys? And I know a lot of door listeners listening to this are thinking, well, maybe I'm currently flipping, or maybe I've got some renters, but I'm thinking of going bigger. So before you made that decision of going into apartment buildings, was it like a really tough learning process that you had to go through to really go to this different asset class?
Well, I think the point of when you're going forward to move into another point, you should get knowledgeable on the subject. You're never going to know it all, so you don't have to learn everything, because it's just never going to happen. And then find other people that are doing it successfully. And that's two key points, because if you surround yourself with others who are doing the space or the niche that you want to just basically get your hands into, you're going to have a much better opportunity to succeed and really just get active and get started. What we did that really just propelled us is when we did buy those duplexes, triplexes out of state in Indiana, we couldn't do anything ourselves because now we're 1,000 miles away. So we had to make sure that we had a team there. We were knowledgeable in the area, and we knew the product we were looking for. So for that point, we had a property management company, construction company, and basically brokers, insurance companies, everybody set up in that market just for these small duplexes. And they were, junk duplex. We're buying it, a couple $1,000, like $10,000, $12,000, put like $20,000, $30,000 into them. And they were renting for a total like $1,100, $1,200 a month. It was like insane. So we're making, like 30% on year, because we have all cash into them. And we're looking at these things and we're like, man, this is ridiculous. And it got to the point that they were so hot there, we actually ended up selling them back at a premium to the person that we brought them from originally, because that's how much they were really moving and how hard it was to come by these properties. So we said to ourselves, and the reason we sold them was, man, if we could do this with 2 units, well, what if we had 10? What if we had 20? What if we had 50? What if we had 100? And at that point, looking at just a lot of things and a lot of other people talking, the economies of scale start to play in your level too. Is that, you know, if I have a 2 unit, I'm still into a certain term of loan class where they're looking at me. But if I start getting up to a point where it's 100 units, well, wow, that's a whole different story. Now they're looking at the asset, making sure the asset's performing. Of course, they're still going to look at me as well and see my experience track record. But if I'm trying to get, you know, Fannie or Freddie loan and they want me to be 90% stabilized on a 2 unit and or even a 10 unit, well, if I have just 2 vacancies, I'm under that platform and I'm having to try to figure out what to do. But if I'm at 100 units, well, I can have 9 vacancies and still be above that threshold and still get very good debt and get it non-recourse. Also benefit from the cash flow, the economies of scale of being able to hire a property manager where maybe I'm paying 4%, maybe 3, maybe 5 compared to my 10% I'm paying for a duplex. I have all these tax advantages from being able to do appreciation just in such a high demand that the property value can be pushed up by just increasing the bottom line. And it just all started to come together and really make sense.
Wow, fascinating. Fascinating. So then you knew about all these advantages, then you took the leap, right? So tell us about your first experience into the foray of multifamily and how
Sure.
did that go for you?
Well, the first one, we ended up going for those 2s and 3s, and we just said, okay, we're just going to go as big as we can. And that ended up being the same thing. We started finding a market, and we were looking at a couple markets, and we wanted the market to have the following factors. We wanted them to have job growth, and it doesn't have to be crazy job growth. We didn't want, you know, big peaks and big valleys. We just wanted ho-hum job growth. We wanted the same thing with population, just a couple people more moving in and a couple people moving out. So 2 to 3% year over year for the last 5 years. We wanted MSA that was at least 250,000 people. So if we had a 100 unit building, it wasn't going to be a big chunk of the community. It just was whatever. And we wanted the job sectors to be diversified. We didn't want one job sector to be more than 20%. So we're not like a steel company. We're not relying on the military where maybe you're going to have something happen that's going to dramatically affect your occupancy. And then the wild card is we looked at areas where I just had somebody that I knew that, and it could be anybody, but just someone who could give me context on the area, not even a real estate background, but could tell me maybe where some of the path of progresses are. Where are they building? Where would you stay away from? Where are the richer places to live? Where do a lot of the factory workers live? And just give me that idea of the area. And that was really helpful. So we targeted down to 3 areas. It was actually North Carolina, Texas, and Kentucky, and various markets within there, and started putting feelers out there and building our team. So before we were even offering on properties, I had gone out there. We were meeting brokers, property managers, insurance people, and really just networking with other investors there to understand what they were doing on all arenas. It didn't have to be really multifamily. I just want to know, like, hey, where are the flippers building? Because usually they're in like the areas that are hot or the area that's just about to be hot. So where are they going to? Where don't they like to flip in because they can't get it? Where are the landlords renting to? Where do they like to have rentals? Where are areas that are maybe more cash flow driven? Where are areas that are maybe a little more dangerous, where they'll take it and they'll get more cash flow, but they're having a higher turnover ratio? Where are they having more government housing? And so we constantly look at these areas, and then from there beat back to our submarkets, to the point then we started now going out and trying to find property. And we found we were making some offers on properties, and there was one that we had offered on about 6 or 7 months prior, and they were asking a little over 3 million, and we offered right around 2 million. And we gave, our basis for our offer, why we did it and everything else. And they came back at 3 million, no counter. So we just said, okay, thank you. Went by, and that property was still out there. It was actually off the market, and we kind of were just still kicking around. And we asked our property manager about it and just said, hey, do you know what's going on with this property? He said, I think they're still looking to sell. They just really didn't know what was going on. So we went in and we actually made the same offer, but we raised to $50,000. We're at like 2.1 million. And all of a sudden they came down from 3.2 million to 2.6 million. And we knew we were in business with that, and ended up being a group that had been in Kentucky for a long time, a family group that had a couple hundred units. And it was the father who had put this whole thing together, had over, I think he was in his 90s, and the kids actually all lived out of state, weren't really interested in really just taking on his legacy and moving with the properties. So this was 94 units that they just were seeing as a pain point, because it was causing a lot of their attention, because they weren't managing right and they weren't putting the right attention into it. So we slowly had negotiations back and forth for another 3 or 4 months, and ended up getting it closed right under our strike point, about 2.3 million. So it just
Wow. From 3.2 all the way down. Congratulations. How many units were this?
94.
Okay, this was a 94 unit.
Yeah.
So what did you have any kind of value add on this property, or was it?
Yeah. So what we came down here is that they were just missing out on so many different angles that they could really make this property more efficient. And even when we got to the last step, we were about $100,000 apart, and we ended up sending them our underwriting, just saying, hey guys, we're not trying to beat you up. This is where the numbers work for us. And we have investors that we have to be able to meet their returns. And where we're at here, based on how the property is performing and looking at what we're going to need to do to be able to stabilize this property and make this property, maximize this property, this is what we can pay. And we don't want to go back and forth with you anymore. We don't want to have this point that you think we're trying to get more than you want. This is just where it works. And they came back to that offer and said, okay. And that got us over the finish line. The glory of this property is that we are predominantly 1 bedrooms with some 2 bedrooms, about 10 2 bedrooms, and the rest are 1 bedrooms. And each unit is about $100 under market. There's about 600 units in this neighborhood. If you went across the street or down the road, you pay $100 more to live in that unit. Beyond that, it was that they were missing out on so many different key pieces, as if they weren't putting in application fees. They were not being diligent on their late fees. They had people where they said no pets. They had about 10 units with pets in them. Every other apartment complex around there had a $200 to $300 non-refundable pet fee, and also was charging $25 a month for pets. So we just turned around and said, okay, we'll put that into place. So we were able to put that into place. We got rid of refundable deposits. We put in a move-in fee. Just felt the tenant base would like a fee just coming in just to pay and not have to worry about a deposit. So we actually charged a move-in fee that was slightly less than the refundable deposit. And then on top of that, we charge a surety bond to help with some damage, or if any damage happens on the end run. We then did within our construction, we put in a water savings package where it was all 3.8 gallon toilets. We took all the toilets, we put in low flush e-toilets for pretty much the entire complex. We changed out 2 of the boilers, changed out some windows, changed out aerators and faucets, and that's cut our water down because it was a mastered owner paid property. That's now cut our utility bill for our water down. We're just at the point of stabilizing, but it's right now between 25 to 30% our water bill has decreased, which has been great. Beyond that, we've done other corrections, just for part of our CapEx repair, just to really make the tenants feel home and really make them feel comfortable in the property, where they don't feel so neglected as they were before, with just not having their repairs done in a timely manner. So our important thing was to get in there, do those points to stabilize the property, but also tackle all the deferred maintenance that the tenants had that were basically being put aside because the prior owners didn't want to help them and didn't want to do anything.
Oh, wow. And you know what's so fascinating, Jason? Like, we haven't even talked about like when the tenants leave and you're actually changing any of the units and putting new appliances. This is just, going in value added activities. So I think that's amazing.
There's a ton of ways that, especially right now when it's so difficult, because everybody always, we run a meetup here in New Jersey, and people always talk about just raising rents. And that's, yes, we all want to raise rents. That's sure. We all want to be at market. But remember, if you have leases, you're not going to be able to just turn in day one and just jump everybody's rents up. And you're not just going to be able to raise rents and expect your tenants just be like, okay, thumbs up, that's great. You're going to have to do something to show them why you're garnering this rent increase. So for us, we looked at other ways. We ended up putting in, we had these large basements that were basically just void spaces. We made storage units down there so we could actually put in storage units. We got a laundry contract in a building where we actually had 2 laundry rooms, only one was in service. Got a laundry contract where we sold all the existing units in there and had the laundry company come in, and now they put in brand new units in both of them. Just a lot of things to really find value and make it a better community. And then past that, going on to the rents, we've turned, I think, I checked today, about 26, so about a little over a fourth of the units so far, and we've just been doing them as the turns come up. We had 7 vacancies when we took over. We got all of them up and going, and for that point, past that, we've been turning the units as they come up, because some of them, the building was predominantly built in the 1970s. There's 5 buildings, and so you still had some green shag carpet and stuff in there from literally the first unit. So as they've come up, we've slowly been turning them over, and that's going to continue to be our process.
Fantastic. Fascinating. Congratulations.
Thank
I'm
you.
just curious, have you guys done an appraisal yet, or you're still kind of waiting?
So we had the appraisal done with the building, and we came in at 2.7 just when we purchased it. So we already felt good on where we were with the appraisal. Have not done a appraisal here. We look at year 1. When we get to year 1, we are contemplating putting on a more permanent debt structure, just with the thought that, of course, interest rates are going to go somewhere shortly. So let's get something under the wraps now.
Awesome. Fascinating. That was a really, really fascinating asset to talk about, because I feel like I've learned so much, about even some activities that I haven't thought of from a value add perspective. So that's really fantastic. I wish we can keep going on and on, but we're definitely dwelling into the quick rounds now. So these are going to be quick questions, quick answers. You ready?
Sure. Let's do it.
First question. What makes Jason unique? So what is that differentiating factor that separates you from the next guy or the next girl?
I'm stubborn because I'm Italian, and I have a great wife who steers me on track when I have a very shiny object syndrome, which is very good in points, but she always asks me this key phrase right now. Honey, is that part of our focus? Those keywords always stymie me, because I have to either say no or think of some very creative response to why a donut shop would be a great opportunity to delve with real estate. So
I like that. You gotta have that. Yeah. Okay, second question. What was the last book that you read, and what was the one thing that you learned from the book?
So I'm trying to read a ton this year. A lot of that can be audiobooks and everything else. I'm reading, what is it? Funnel hacking? Is that what it is? Oh man, I'm blanking on his name. Brunson. I'll give it to you for the show notes, but okay. It's really just about creating programs and funnels to be able to help customers understand their needs and get them their needs through the opportunities they're presenting.
Fantastic. Thank you so much for that. Last question. So I know you and Pili, you got a bunch of stuff. Of course, you got your kids, you moving houses, you managing your assets. What do you guys do for fun?
We have a ton of fun with the kids. It's amazing. We have 2 young kids, another one on the way, and we are at the point where that is a lot of our time, and we love it. I run a lot. I work out a lot. I run marathons. I love to run, get up, run early. And I've been doing CrossFit, which is fun as well. Pili writes a lot, and so for that, we try and get up earlier and earlier to get those activities in. However, the kids, I think, keep trying to basically one-up us and get up earlier and earlier and earlier all the time too.
That's awesome. That is awesome that you run marathons. I mean, wow. I'm hoping I get there one day. Fantastic. So if a Dwell listener is listening to this and they're thinking, I love what Jason and Pili is doing, I want to connect with them, where are you most active, or how can people reach out to you?
Sure. So our website can give you all the channels to reach out to us. It's yarusiholdings.com, YARUSI holdings.com, or you can reach us at Jason at Yarusi Holdings, or Pili, Pili, at yarusiholdings.com.
And you want to talk a little bit about the IRF Foundation podcast, one of my favorites?
Yeah, thank you. So we had a great interview with Mr. Ola himself a few weeks back. It was incredible. And if you want high energy, high impact, and just have that feeling of emotion of why you do something, when you have to listen to that show when we had Ola on. It was everything that we wanted. I was so amped up. It was in the morning. I was ready to go do something. I didn't know where I was going. But for that point, the REI Foundation podcast is just a basis where we give you the steps and missteps that have guided our careers to where they are, and by also bringing on top industry performers to allow them to also give us the tricks and techniques that they've used to really let their business just blow up. And it's been an awesome platform. It was a give back for us, just trying to help others. And it's almost oddly an odd feeling because we get so much out of it with just the intent that we're trying to give and getting so much at the same time. So
it's crazy.
You find us on iTunes, all the channels, and you can see a link on our website.
Awesome. Thank you so much, Jason. I learned so much. I had a good time. It's awesome to have you on the show. Thank you so much.
Thank you, Ola. This is amazing.